Alrighty, Forex traders. Time to do our job, change the world, make it a better place. We do that by making money. Then you can invest your money any way you want. Let's go! Good morning. Welcome to the Forex.Today YouTube channel. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but it's always a good idea to stay small, to stay humble, focus on the long term, and never risk money you cannot afford to lose. Boom, 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 boom. So, interesting times in the world around us. Everything is so different, and we'll see about that. But anyways, hey, markets are moving. You should be happy. By the way, my name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Thank you very much for being here at the Forex.Today YouTube channel. The raison d'etre, the mission of Forex.Today is to help you become a better foreign exchange trader. And maybe, just maybe, when you develop skills and confidence and you're ready to trade real money, you'll choose Traders Way as the prime broker for your new, successful Forex trading business and trade profitably with patience and discipline for years and years and years and years. So please visit TradersWay.com, open a demo account, download MT4, check out the execution speed, check out the spreads. If you don't like spreads, you can have an ECN account. Cool. And then check out the amazing swaps and world-class customer service. TradersWay.com. And here on the Forex.Today YouTube channel, if you appreciate what I'm doing and you like this in your life, please let YouTube know this is quality content. That will help support the community. Simply give likes. You could do that now if you wanted to. You could subscribe if you're new so you get invited to future live streams. And then please always leave comments on the video. Ideally, what you do on the video recordings is document the thing you learned that day, because you're leaving a note to yourself, and it's another way of learning and remembering. Because if you can't remember what you learned, then you didn't learn anything. So not only did maybe like when I did, let's say the Baltic Dry Index, you're like, oh, that was really cool. 6 months from now, you won't remember anything, right? So maybe write it down and it will stick somewhere in your brain. That's what I would do if I were me. What do you stink? Smell like a plan? All right. Mr. Highfold says, yeah, the OCO order from yesterday were handy. Yeah, totally. Yeah, metatraders.com. All right, cool. So let's just do some technical analysis. Let's just see where we are in the world after all of this news, right? Cool. Oh, what did you screwed up an order? Uh-oh, that happens. Shouldn't, but it does. The interesting thing is, you probably had an experience, Mr. High Volt, where you say, hey man, that'll never happen again. and then you carry out what you need to do. All right. But I'll tell you, Mr. High Volt, leaving an order in the market used to be a common thing like 15, 20 years ago. Imagine placing orders on a phone, right? And you don't even see a chart. You have to remember where your entry was, right? Especially a working order. You're like, yeah, if this drops down to 68, buy it at market, right? And then put a stop here and put it, and the weird thing is, if your stop gets hit, like you lost money, if you had a limit order, you have to also cancel the limit. They weren't connected. And then even back then when you did get charts, my first charting package, you couldn't trade on them. They were just there for reference. And then later on, when you could trade on your charts, you didn't have things like OCOs. You had to do like parent and child. Like you had to do really much more complicated ordering systems. And long story short, is back in the day, it was fairly easy to leave an order in the market. Nowadays, it's not, so sorry about that. Because your order is supposed to be connected somehow. So somehow you must not be placing your stops properly. You must be placing your stops as a secondary order. Oh, right on, Peter. Good job. Good job, Peter. Excellent. Man, you killed it. Crushed it this year. Hey, Pete? Good job, man. Just perfect. So anyways, yeah, so I'm not sure what you did, you know, and maybe it wasn't Forex and stuff, but like, I'll show you a trade here. So like, if I bought this, okay, I'll buy this. It's set for here. I don't know why it keeps resetting at such low. But anyways, let's say I bought this. Boom, look, I just bought it. Okay. Now, you see, that's the order. It was a market order and then instantly got placed in the market when the order got filled. Okay. Now, there's multiple ways you can do this. You can modify and add a stop, and this is really complicated. I must be old school because I always find this really slow, and at what price, and what maybe you adjust this, and what the heck is a level, you know, all this kind of stuff. Here's what I do. I grab the order and I drag it and I place my stop like this. Now, if this stop hits there, that automatically cancels it. Okay. Now, some people close this. Okay, now, oh, it closed the whole order. Oh, didn't know it would do that. So you could do it. You could tie a stop manually, I believe, but so I'm not sure how you did it. But anyways, yeah, Peter's like, yeah, it was a fantastic year. Good job. Yeah, I hope you don't mind me saying, but Peter in the swing group took all his trades in the third week of August or whatever, very close to that, like he was supposed to. And like a couple of, what was it, 2 or 3 weeks later, I logged into the swing trading group. I'm like, oh, what a great month. This is fantastic. Everything we wanted has happened. I'm like, who's up 1,000 pips? Right? And Pete's like, yeah, I got 1,000 pips on the pound yen. I'm like, that's really good. And then I'm like, and then he's like, yeah, and I got 8 others. Like, yep, that's how you do them. Stack them and pack them, Petey. Yeah. Yeah, no monkey ward at the Pete's house. So anyways, good job. Cool. All right. Boom. So anyways, there's a discussion on stops. Very nice. Very nice. Yeah, but that's how you do it, Petey. Mr. Ward, I should say. Okay, so I'm still sort of in the idea of buy the rumor, sell the news. Everything is not as amazing as everybody thinks it is. Sort of like when everything was so bad in the UK and everyone was going to move to Germany. You're like, really? Have you ever been to Frankfurt? Nobody's moving from the London to Frankfurt. Oh, no, they're going to move to Ireland. No, they're not. No, they're not. So anyways, remember, like, oh my God, no, London is going to be a ghost town. I'm like, no, it's not. But anyways, so there's always this irrational, emotional stuff. And it's funny because I'm not really that emotional, right? I could be in a real bad mood today. Let me tell you about my day so far today, besides all the elections and stuff. In the middle of the night, it's raining cats and dogs. Wakes my wife up. She goes downstairs. There's water coming into the great room. And it's going through the walls and it's in the movie theater. What? In the middle of the night. Yeah, I got water in my movie theater and my great room. Like, what? Then, when it's finally time to get up, the kids are running downstairs in the morning to get ready, and the dog's going, and the dog falls down the stairs and boom, 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 boom. And they're like, oh, the dog. Everyone's freaking about the dog. I'm like, she'll be all right. She'll be all right. Oh, the dog. All this emotions, right? And then what? Could it get worse? While I'm in the shower, the wife and kids leave the house and somehow set off the alarm. I'm in the shower, I got Bloomberg going super loud, I'm in meditation, and my phone starts ringing, like, who the hell's calling me in the middle of the whatever? And I'm like, and finally I get out, I turn the shower off, and beep, 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 the alarm's going off, there's police in my front yard, and I'm like, fuck! I could be very emotional about all this stuff, right? Like, that's seriously my morning, right? Hey, whatever. Some people freak out. When I see things like, especially around Brexit, like London is going to be a ghost town and everyone's going to move to Ireland, Paris, and Frankfurt. I'm like, no, they're not, dude. You're freaking out. The sky's falling. The sky's falling. The sky's falling. There's going to be a zombie apocalypse because of Brexit. I don't know. So now that was oversold, and then now it's like, now there's this, oh my God, the world's going to be good again. There's a pretty good chance in the next 2 or 3 weeks people go, wait, this whole Brexit thing sucks. It's ugly. It's going to take a long time, and negotiations have to start over again with Europe, and nothing's actually changed, right? And you know, so there's always this buy the rumor, sell the news, and all this kind of stuff. So I'm not saying that's going to happen, but it was nice this week. This was a good week, right? This was a good week in the sense that the Fed has really given us more clarity. Christine Lagarde at the ECB presented well, right? She doesn't like negative interest rates, and she seems like capable and calm and focused and all that kind of stuff. So that's good there, right? All of that's good. Now we got the UK thing all fixed and organized, and that's really good. Maybe Trump's going to do a deal, but you know, like I've been saying, if they do a deal, there's a good chance that it's not going to be really much of anything. And if they don't do a deal, maybe that's the news. And so, like, it went really well, right? It went really well, which is really nice. We got some clarity in the world, but we still need profit taking, right? Yeah, Marina. And what's up with the Rand again, man? Up and down and down and up. I say that's Marina's fault. Come on, Marina, fix that czar for me. So anyways, don't freak out. So today, let's just focus on technicals. Let's just look at what it is. Don't be so sure. Oops. Wow, why did that happen? Don't be so sure. Let me put this back. Let's take a look at pound Swissy, for example. Don't be certain that this goes higher. Okay? I think it's an amateur move to be certain. In fact, that's what we talked about in the swing group yesterday. Don't be certain. Be afraid. Be nervous, really. You know, you end up losing money when you're certain. When you say, oh, Brexit is done, and look, this jumped 300 pips. So now we're on our way to 140, and you start buying this dip down, 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 down. Don't be certain. Okay? You understand? It's really easy in such a situation to lose money. Okay? Here's my worry. Let me try to say it differently. I've helped you focus all year to think on a bigger scale, to plan like a business, to think like a business, to act like a business, right? Was December 12th a big day? Was December 12th an unusual day as far as the markets are concerned? Yeah. When did I first tell you? When do you acknowledge in your brain? When was the first time you heard December 12th is an important day from me? September? August? July? When did you first hear that from me? I want you to think about this. This is important. Please answer. Okay, I want you to think about this. Again, I'm giving you a bigger picture that amateurs do not have. Okay? Come on, type it, guys. 5 answers. This is important to your education. This is important to your psyche, to your emotions, to your intellect. I know it's a rhetorical question, but it's important that you manifest it because then it gets stored somewhere else. Okay? All right. So imagine this now. Whenever you heard, I see summer, I see months ago, I see August, I see July or August, October, couple of months at least, August. Okay. So isn't it amazing that on the day, right? Well, how about, let me ask one more question. How many people literally heard December 12th? Not just like the second week or the third week or something. How many people remember specifically the 12th of December? The day after the Fed meeting, right? See? Yeah, we're talking now very specific days, right? Cash says seasonals don't always apply though. Wait, oh, absolutely agreed. I don't know what's going to happen. But here's the thing. We had a very dramatic day on the day I called 2, 3, 4, 5, 6 months ago for logical, intellectual reasons, right? Okay, cool. It's not magic. It's not voodoo, right? All this kind of stuff. I'm just trying to say that there is a bigger picture here. You've been working hard all year to think bigger, to act bigger, to have better plans, to have control. Don't throw it all away today because you see this giant big green candle and now you're certain. Oh, the yens are going to go up and I'm going to make all these pips by the end of the year. Don't think that way. Don't throw it away. Plan. Okay? This is my Christmas gift to you. It's very important. It's very valuable. It's a huge lesson. Don't lose a lot of money today because you're just blindly buying dips, certain this is going to go higher. For the Swissy pairs, for the yen pairs, okay? This may be it. This may not be it. Plan. Have detailed plans for what you're going to do next. Okay? So let's try to mess with this. Do you want to be a bull on this? If you did want to be a bull with this, right, I'm going to need to change my template. Let's do it this. Let's play around with this new tool. Oh, it's up here, isn't it? Daily bullish day trading. Okay? You're only now, think about this, because I don't know if you've already lost money throwing down silly aggressive trades. But think of this, we've only now, according to this, what we call day trading tool, aka daily pivots, we're only now at a price where you could even consider it. Think about that. Okay. It's interesting, isn't it? Only now could you even consider it. Not even that it's good, but if you have discipline and patience and followed basic rules of engagement, You couldn't have bought it here or here. You can't buy it here. You can't buy it here. You might have bought it here if you're redonkulously aggressive, but you couldn't even have thought about it before. Well, Brooke says last 10% correction was followed by a huge spike in volatility. Well, they're the same thing, right? They're the same thing. You can't have a massive exodus without volatility because the exodus creates volatility, right? But anyways, so that's kind of interesting. Basic rules of engagement would have prevented you from even trading this because you only buy low. Remember that whole patience and discipline thing? You only buy low. So by definition, where is low? Well, the first one you could even possibly think is 31.50, right? 31.50. But this was at 33. So you would have had to have the patience to let it drop from 133 to 131.50. How many amateurs do you think bought it on the way down? 150 pip drop. But that's how amateurs lose. They're like, they react. Okay? An amateur, because I know you're a young professional, which is great, you think differently, and that's the biggest point. But how many people see the giant candle and then become a buyer? You've worked hard all year to move away from that type of thinking. Am I right? Tate Love says fear of missing out. Yeah, that's what amateurs do. How would you describe that? A winning attitude or a losing attitude? The fear of missing out. You know what the fear should be? Not having a trade plan. Well, Wayne, I needed the yellow Lamborghini and I thought if I bet the farm on this, I can get it. Yeah. Okay. Oh man, I'm trying to get this to fit a little better. It's better on that side. And then this a little wider. Much better. Okay. Edward says 95% of all traders jump all over that candle. Yeah, and they lose. Okay? What's happening here? This giant candle here, all kinds of stop losses, right? So like, now that I got my drawing tool, do I have my drawing tool? I went back down there. All right. So like, for example, anyone that bought it here had a stop somewhere, right? Where was their stop? Somewhere around there? Down, 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 out. Okay? Right? So really, we're at 31.50. The next one is really even lower than 131. This could drop at least another 100 pips to get to a 130.50, for example, or about that, right? Before you could even think about it, really. So, food for thought. I want you to, I remember I was mentoring someone that was going through a losing period, and the first thing I did is I had them do a daily mantra. They would first of all, they wrote it down like a speech, and every day they would say, I am a professional Forex trader. I am patient. I am disciplined. I do not chase price. Okay? Stuff like that. Today, I will not lose a lot of money. Today, right? That kind of stuff. I do not chase price. Today, I will not lose a lot of money. It's very important, these mantras. And so now you're in the proving grounds. The markets seem magical. Whoa, my God, it just moved 300 pips in a day. You know, non-farm payrolls used to move more than that every month. It's amazing how much things have changed. So to me, it's no big deal. I look at that, I'm like, it's only 300 pips. But I also know people that don't have it planned are going to chase. They're going to chase it and they're going to lose. So be careful. Don't be certain. Okay? Be afraid. When you enter, make sure you buy at support or you sell at resistance. Make sure you manage your risk, because on a day like this, when it moves 300 pips, you can see, like when I went, where were we now? Where were we? Anyways, I was trying to get to that point where like the next stop could be 100 pips away. Dude, the candles are bigger. They're worth more. You could lose more today than you could all year. Right? Think about it like, I've told you many times, the way you make money in Forex is the boring trading. Your trading should be boring, right? The daily routine. Building up, stacking up trades based on your strategy of fundamental and technical analysis, right? Which gives you a bias. And then you plan and stack your trades. It's really boring. It's day after day after day after day after day. Okay? But you make a lot of money doing that. And then you get days like this where it jumps 300 pips in a day. The amateur mind says, oh, easy, quick money, good. If you've been around a while, it's not necessarily good. It can be good, but it's not necessarily what you're looking for, what you're planning for. You understand? The boring, planned out stuff based on, fundamental and technical trends is where you're going to make your money. And it's really boring, low risk, day after day after day stuff. The quick and the easy is for the dead, usually. Now, you're going to read about some hedge fund manager that plopped $1 billion on it and made tons of money overnight. But it's the wrong thing to pay attention to. Okay? It's not good. So, anyways, I'm not saying this is coming down like a ton of bricks. What I'm saying is be certain you have a plan. Be certain, like write it down in words or print out a chart and draw the price action before you do it. Okay? You understand? So let's go back to that Kiwi Swissy. If you were going to buy this because you were certain it was going to jump back up, let's put it, where did I have an hourly chart? I don't know what we were on. I must be looking at something else. But anyways, if you're certain, was it pound Swissy? Yeah, it was pound Swissy. All right. If you're certain, well, let's say your plan is to buy this, print this chart out right now. Print it out. And then take out a marker and draw your plan A and plan B. Okay? So plan A is what? Well, if you're buying, you got the moving averages coming down against you. You see that? 2155 cross. So at the very least, you got to go up to the mean. Probably another test here, because this is actually a price, right? 131.50. And then maybe an up. Wouldn't you think like that is one plausible reason or a way that this would reverse? Then the second thing is delete that, print out another blank one, and draw another scenario. What if it does that down here? Would you buy it? Under what scenario are you going to take the risk? No, Cash, I can't plan for everything. No. So, Cash, this is why we have technical analysis. My fundamental analysis tells me if I'm a buyer. Okay? So we know if I'm a buyer, let's say, and I'm not saying I am a buyer, I'm saying you're in this example. If I was a buyer, technical analysis does a couple of things, right? Tells me the price and the time. The price is on the right-hand side, the time is on the left-hand side. So the first thing I can do is say, well, if I'm a buyer, I can only buy at support. So I use technical analysis, things like maybe daily pivot points, or price action is another one. So I have price action here. I have a couple of pivots. And I say, well, at what price could I be interested in buying this if I was a bull? Okay? I'm not taking anything else in consideration. If I was a bull, then where are the levels of support? What price is support where I could consider it? So I do some quick analysis and I say, well, 131.50, and then the next one is it's 130.70, but it might be closer to 130.50-ish, but 130.70. So anyways, I come up with it, and I'm like, plan A. So literally, you should print this out, guys. Learn how to save, learn how to trade under serious duress, okay? Get really good, because this is going to happen a million times more in your trading career, because you're going to be trading for decades. So get really good at this. Remind yourself, you might be thinking most people are making tons of money on this. Boom, they crushed it, and everyone's super rich. It's not true. Most people are losing money. Okay? So get really good at this and at least survive. Okay? My number one goal for you is to teach you how to stop losing, right, tons of money, to stop bleeding out. Okay? So anyways, you should really seriously print all these out, have your plans written in place. Those are the two closest prices I would consider to buy if I was a bull. Now, that only tells you price, right, Cash? Cash is like, well, you know, that you can't account for Trump tweets and stuff. Oh, I know. So the next thing is I have to wait for a technical setup. What kind of technical setup should I do? By the way, on this 15-minute chart, do I feel comfortable buying when the 21 is below the 55? Right on, Raul. No, I don't feel comfortable at all. You see what I mean? But amateurs are forgetting all this. Amateurs forget the basics. They're just so certain this is going to go up. It's irrational exuberance. Do you feel comfortable when the market technically is bearish? Well, you shouldn't. So how do you overcome this? Well, we need technical analysis, right? Okay? So that's why I'm like, you need some sort of technical analysis. In fact, I'll draw this. If it goes all the way down there, it's going to be a little bit more of a battle. I think you'll get a move more like this. Okay? Now, this is one scenario. That may not happen and probably won't happen, right? But if it did happen, I have permission to take it. And then you go and you create a different scenario, a different possibility. Okay? So I would print this out and then I'd do it over again. Well, what if plan A does hold? What if this does create a double bottom? Well, I'm not going to feel comfortable buying at the 21. So we have to breach the 21. So I would say, well, the same thing that I drew down here. Why the same thing? Well, because it's just technical analysis. It's a reversal pattern. It doesn't have to go down this way, but it really could. Where would I want to buy? Do I want to buy here? Yeah. Do I want to buy here? Yeah. Okay. So on and so forth. Okay. And do you think we will be challenged up here? Will 133 be resistance? You should be able to think about that now, right? So you say, okay, that'll kind of wimp out, and then we'll do the big hurrah challenge, and then what? So you plan all this out now, write it down, literally write the words down. If it does this, then I will do that. Check this out, ready? 133, 333, 333. Boom! That just happened. Snap. All right, cool. Better, right? And you print it out. If you can't predict the future, you will not be profitable. Okay? You understand? This is your opportunity. This is your final examinations for the year. This is your big test. Are you a professional that has control over the situation, or are you an amateur chasing price? Like a flea-bitten, dirty dog chasing its tail. Which one are you? Yeah, it's right. I don't know what's going to happen, so I have plans, right? So that's all if you're a bull. So let's take a look at a different scenario. This is set up to be a bear. Okay? Okay? Well, Lulo, you shouldn't be like, it should be no big deal. You shouldn't have tons of money on, and all your stops should be set. Like, if it doesn't work out, the worst case scenario is tiny little losses or a bunch of break evens, right? So there's no real praying. Like, God's going to say, dude, seriously, you called me based on your 30 pip stop loss, right? I got leprosy I'm dealing with here, and you have a 30 pip stop loss you're praying about. Come on. Right? So there should be no reason to pray to God if you're trading properly, of course, right? All right. So this is still set up bearish. Okay, the top of this month is currently near M3, not perfect. And the target down here is still down here, right? 74, let's say, is the first target. Okay. So what should I do here? Okay. Well, I'm at next week's M3. I'm at a monthly pivot, and it has failed to make a higher high. Cool. So I might want to drop into a smaller time frame. And let's see, change my template so I could do day trading bearish. So I've decided to be a bear. Okay. Now, we started the day too high. Right off the bat, that says don't trade. Isn't that cool? When you're above it and you're a bear, you don't trade. So what we're looking for, I don't know if it's going to be today, but we really need to look at tomorrow's pivots. But the general idea is the red zone, right, is supposed to be resistance. So when you're above it, you're like, that ain't working for me. Okay. So let's get off a 5-minute chart now, and let's go to a 15-minute chart. And luckily enough, tomorrow's pivots are basically the same as today's pivots. So there's my plan A. 174.67. So we'll call that plan A short. Oh, for show. There we go. Plan A short. What do you think about plan B short? A lot less ideal, right? But nonetheless, it's only technical analysis. I can consider it. Doesn't mean I have to do it. All right, plan B short. And do you see now the stress reliever of having trade plans? I'm not wringing my fingers over like, should I buy it? Should I buy it? Should I buy it? What do I do? What do I do? Okay, I now know my prices. In fact, I can take this even further if I really want to be stubborn about it. So let's do it. I think that's the right price. 74.79. Yeah, okay. Point 7479. Like, I know to that degree. I know my price. If I'm going to sell, if you got a problem, I'll solve it. Okay. What's this? 74.67. A little lower than that. I guess it's 74.64. So, hang on. 74.66. Plan A is short. Point 74.66. 74.66. Okay. It's basically the same thing, right? But this is just a day trade, right? So there would be my plan for tomorrow. Now, I do have the opportunity to trade it today. In fact, I should be, because I'm not worried about today, am I? I'm worried about tomorrow. This is all about tomorrow. It's all about the pips, not trading. So I don't have to trade, but I can trade. Okay. And now there's a detailed trade plan. It's not even a good one because it's not really trending. So really it's a sideways trade, but I have permission to think this way, right? And now I can change things and say, okay, those are 2 day trades based on tomorrow. I'm going to do take a look at the weekly swing and see how we're moving here. That is my sell zone for the week. Is my day trade still okay? Okay. My weekly sell was 74.74. Which is right in the sweet spot of this. How nice. Or sell at 75, but that's not going to happen tomorrow most likely. Okay? So now let's take a look and say, okay, my weekly trade plan is still valid. My daily trade plan for tomorrow is okay. And just where are we in the scope of things for the monthly move? So on the monthly basis, I wanted to be short 75, and I've already had that opportunity. Okay? So that's already in play, don't you think? From here to here. Right? Right? Oops. That's the problem with having the watermark right in the middle. but it's easier for you guys to see in the videos. So anyways, if I'm a bear, I'm probably thinking this way. I'm probably planning this way. Okay? Does that seem less stressful? Hmm? This is how you're supposed to be doing your job, right? Every day, every trade. You should be planning tomorrow now. Is that right? Cash's intuition is making trade plans. Come on, Cash. So, you need to decide whether you're a bull or a bear. That's what it comes down to. If China announces a trade deal, Aussie Swiss franc will go up. So you have to decide, is that what you're, right, Cash? What does your intuition tell you? Well, if that's going to happen, what are you going to do about it, right? So that's set up bearish, but if you're a bull, do you have a trade plan here? Okay. You're at tomorrow's M2, which is tomorrow's buy zone. You're at today's M2, which is today's central pivot. Okay. So to say this differently, you might have been a huge bull here. You're not allowed to buy it. You might have been a huge bull here. You're not allowed to buy it. You might have been a huge bull here. You're not allowed to buy it. Okay? Plan A, plan B for today. This was drawn way back here. Just like I'm not looking at today. You have to understand, I'm looking at tomorrow. If I'm a bull, that's what I got planned out. And I love me at 160 or at 67.80 something. Okay. Well, the thing is, it's almost 9 o'clock at night in Beijing, but see? This is actually an OOP, and this is an OOP, but I've always said you don't want to make your money on OOPs. But you can if you have to. But you shouldn't want to and stuff like that, especially on a daily. Like, you can't wait for it to come down on a daily. Like, OMG. Yeah, I'm patient. Yeah. Where's the trade? Was that right, Joey? Yeah, they're the central pivot to M2. So this is the same as every other chart I've ever used forever and ever and ever. So traditionally, what I've showed you was this. Okay. And I find this perfectly comfortable to trade with. So ridiculous. Like, there's your buy zone. There's your, right? This is your buy zone. This is your buy zone. And this is your buy zone. And so tomorrow, I'm looking at tomorrow's pivots, and I'm thinking that. Super redonkulously easy. Now, some people look at it and they're like, I don't get it. There's too much going on. I'm like, really? So I've been working on a tool to say, well, all right, so let's say if you're a bull, what if I just narrowed it down? Okay, bulls, let's do this, right? Bulls buy here and they exit here. You see that? Bulls buy here, they exit here. Yeah, right? Is that amazing? Look at, let me go into a 15-minute chart so we can really kind of zoom in a bit. Check it out. It drew the pivots while you were still here. And it was saying this was the buy zone. But check this out. Bullish profit zone. Can you see that? It actually tells you where to get out. But the funny thing is, you knew the day before. What? You knew over here. Near the big question mark. What's going to happen tomorrow? Well, if you're a bull, you would buy it down here and you would exit up here. You knew this like 12 hours in advance. Isn't that redonkulous? And then it says, hey, if you're a buyer, you really should wait for it to come down to here. And if you do, this is your profit zone. But you knew it over here, near this question mark, because you're already planning out the next day. It's amazing, right? But it's just day trading. It's just day trading. No big deal. No big deal. Just day trading. Now you can switch it up here and okay. And it's not very good on a weekly basis. And I'm not sure if I even have monthly yet. Did I set up monthly yet? No, but okay. The monthly says this. If you're a bull on Aussie Swiss franc, and remember, you knew it over here. You're thinking, what's going to happen in December? Well, if you're a bull, you're thinking, I want to buy it in here and target up here. Okay? It doesn't tell you to do anything. It doesn't tell you you should be a bull. But if you are a bull, so you're trading a double bottom now, this is these are the zone of prices you will consider getting in. And this is the zone of prices you'll consider getting out. It doesn't tell you to do it. It just says if you were going to do it, that's how you would do it. And you'd still have to be like strong enough to not just say, okay, I like that you only look at the indicator only. You have to think ahead a little bit and say, yeah, okay, a double bottom would be an interesting reversal pattern if this is going to suddenly start going north. Okay. And then we bust out of this range. So as you know, when you trade ranges, you wait for the breakout, you wait for the pullback, and now you long here. Okay, only a bull would do that. Well, a bull planned for this double bottom in advance too. Okay, and this is for the month of December. Okay. Okay. Now, if you're a bear, your sell zone was here. And this was the best price you could possibly hope for. If it goes any higher than that, you're done, you're out, you're taking a walk, goodbye. Maybe you'll wait for a double top, but it'll have to double top for you. You'd have to like lose money here and then really see it do this, and then maybe you're on that shoulder. Okay? But your general trade plan is if you were a seller way up in here, you're going to be a seller in here, and you're targeting way down there. Okay? So again, you're saying, well, these pivot points are very unclear. They're not telling me what to do. No, they're not. You're supposed to tell the indicator what to do. Okay? If your indicator tells you what to do, you're not a trader. Your client doesn't need to pay you money if the indicator is making all the decisions. You're not adding any value. You're just a cost center. So you must be the one that makes decisions. Is it going down or is it going up? That's it. That's your job. And if somebody asked you, well, you're going to dump $1 million of my money on this, why do you think it's going to go up? Oh, well, let me explain that. I got 3 good reasons. One, fundamentally, let's take a look at how the trade deal between China and the United States will affect Australia. And we'll start by balance of trade data and how that improvement will affect the RBA, the Reserve Bank of Australia, and their monetary policy. And once again, tying it back to what will happen to the Aussie. Okay, cool. Now, the second thing I'd like to talk about is just the global macroeconomic conditions of a trade deal between the two largest economies in the world. You know, like, what does it all mean for risk, the pricing of risk, and risk sentiment globally? And when we discuss this, I'm going to discuss it through the lens of the Swiss franc. See, the Swiss franc is a unique currency. First of all, Switzerland in of itself is considered a safe haven. And also Swiss franc is backed by 40% by silver. So it's considered, you know, truly like a risk-off asset. Well, in this case, when we analyze the trade deal, I would say blah, 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 blah. And that's why I would put $1 million of your dollars on that. Does that make sense? Johan, do you have something to say? Hang on. Does that make sense, guys? So I hope you're receiving my message today. It's really easy if I want to get YouTube clicks and likes and views for me to just go out there and, yeah, go, trade, let's go, let's get filthy, stinking rich, dropping money. A friend of mine was a professional baseball player, and when you're the rookie, you're supposed to take the guys out, the rest of the team, and pay for alcohol when they party. They put it all on your tab. The thing is, you're making, $700,000 a year, which sounds like a lot, but the guy next to you makes $30 million a year. There's a big difference. And he's been playing for 5 or 6 or 7 years before you. So this guy is like a bajillionaire. So anyways, my friend, he says, he goes out there and he's like, he literally has hardly any money. He's got like $100,000 in the bank, and it's his turn to pay for the bill. And he looks over, and his locker mate, the guy next to him making $30 million a year, he's at the bar, and he's waving to him, right? He's like, I'm placing an order on your tab. And my buddy's like, oh my God, I only have $100,000 in my account, right? And he turns, and the guy gets the order, and he's got 2 bottles of champagne over $1,000 each. And he's like, pouring it on the ground. People are holding their glass, and they're just like pouring it. Right? That would get a lot of YouTube clicks. But it's not how you play baseball. I'm trying to teach you how to play baseball. Get in the game, right? So anyways, I don't know if that was a good analogy or not, but true story. Bitches! Pouring all the champagne. So anyways, patience, discipline, analysis, hard work, long-term point of view, trading like a business. Okay? So really, like, think about this, guys. Is this going up or down? Well, buyers are buying it here. We know that. This is factual. Professional investors made a decision. There's no doubt in my mind buyers bought that there for very logical, intelligent, pre-planned, sound reasons. And I have no doubt in my mind that professional traders were waiting to sell it up in here. And they're also waiting to sell it up in here. That's their plan A and plan B. This is simply down here plan A. Okay? And everything in the middle is just noise. Sure, Leonardo, but I want to show you more conservative stuff. Again, I'm trying not to get you guys all excited about getting rich today. I'm giving you an hour and a half lecture on staying professional, staying focused, staying patient, staying disciplined, because you've worked very hard all year for this. I even told you the day the pop would happen. And now I'm trying to show you that you could lose a year's worth of work, not just money, but patience and discipline. It's very hard to develop and it's easy to go away. Right? It's like 27 years of sobriety and only one bad day. But the bad day is devastating. Okay? Okay? So that's the message I'm trying to get across. The next plan is the important one, right? Look at this. Like I was showing you. It's already moved, what, 75 pips on the way down. Told you. All right, good. Get rid of plan A. Cool. I just saved you money by switching to... Right? So now you got to move this to the other one, plan B. Cool. Told you not to chase it. Where was the support? We have a daily central pivot. Come on. Where's the real support? Where's the juice? Right? Where's the juice? Price action. Cool. Okay? So now we're in the buy zone, by the way. It doesn't have to come all the way down here. You're in the buy zone. So on a small time frame, like let's say even a 1 minute chart. Are you patient and disciplined enough to wait for a 21.55 cross up on a 1 minute chart? Are you patient enough to do that as a bull? You either can do it or you can't do it. You'd be surprised how difficult it is. Okay? A lousy, stinking, no good 1 minute chart. What else do you see on this 1 minute chart? What if you had stayed bearish simply because you're below the 200 EMA, the fair market value? What if you, as a bull now, challenge yourself? And I'm not saying you have to do this or it's a tactical. It's a thought. I want you to think about this. Under the duress of the fear of missing out, whatever that stupid thing is, do you have the guts and the strength to at least wait for this to be above the 200 EMA? Look at the rewards that bears got this whole time. Sell, 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 sell. And I think they're going to keep selling. In fact, I think they're going to keep selling down to either 130.70. I'm even thinking it pops down to 130.50 and then pops back up. But that's just me. Okay? I wouldn't be shocked if it does an Arctic turtle on us. Does this, does this, does this, does this, then recovers. So by then, the moving averages will need to start crossing. And then, on a 1 minute chart, maybe at that point, it comes down and it comes, well, let's do this. Let's see if I can draw the 200 DMA in the future. It's really flat, right? Okay. And so can you wait for this? Or even better, the break and then the pullback to like maybe second test, right? But anyways, the idea is this. Can you wait for this if you were a bear? This is a 1 minute chart, guys. Can you wait? It's tough, man. It's tough. Okay. Okay. See what I mean? Think about it now, even write it down. What technical action will allow you to be a bull? Are you going to wait for a 21.55 cross up? Or are you going to wait for a 21.55 cross up and then take the next 5.8 cross up, which means it will have to cross down and then cross back up? Will you need to wait for price to rise above the 200 EMA and then pull back to the 200 EMA? Will you wait for, well, Pro Trader says RSI, on what time frame? 1 minute, 5 minute, 15 minute? Which one? Be specific and say, okay, I'm eager to go long, but there's too much risk in the market right now. So therefore, I have to wait for some sort of trigger event. Rules of engagement. When are you allowed to take the safety off and start firing? There are rules to war. Okay? What are your rules of engagement before you start firing off trades? Okay? Write it down and you will survive. Ooh, my plan A short just dropped like a bajillion. Okay, cool. So people want yen pairs. Okay, let's go to yen pairs. Okay. Pro Trader says, I am a high risk, aggressive trader yet with good risk management. That's totally fine. That's a different way to do it. But like Pro Trader, I could not teach that to a group of potentially new traders. Some people might have 5 years of experience. Some people might have 5 months worth of experience. I can't just drop in and start like, this is how you can be a super aggressive trader, right? Well, if you don't know how to trade, you can't, there's no way you'd be a good professional or a good aggressive trader, right? So I have to teach all those other things first. You understand? So I can't teach that because most people will just lose a ton of money and I don't feel comfortable with that. Now, once again, I could probably get twice as many views every day, but that's not the raison d'etre of what I do. That's not, I haven't dedicated my life that way. That's not the point. Okay? Cool. So right now, instead, I'm teaching you how to survive. Okay? That's my number one goal. Because if I can't get you to survive the next 5 years of your trading, then what's the point? Right? Like, there's no point. You're going to blow up your trading account. And like, why would Traders Way want that? You pop in $500 into a trading account, you blow it up in 3 weeks and go away. Doesn't benefit them at all. Well, what if you could survive and trade for the next 5 to 10 to 15 or 20 years as a client to Traders Way? Well, that would benefit them well because they offer you a service and that's how they derive income and that's how they pay salaries and stuff. And that's called a legitimate business. They're offering a good service and their clients are benefiting. Great, that's what they want, right? Trust me, there's tons of Forex brokers that actually want you to deposit your $500 and then blow up your trading account. Okay, that's called a B-book model. Does anyone know that one? They are certain you're going to lose your money. Why not? 95% of traders lose their money. So this is a B-book type broker. What they do is they take your account, you pop in your $500, and they're like, there's no way this dude's going to make money. So they don't enter the trades. And you blow up your trading account, and the $500 goes into their pocket because they know you're going to lose your money. You suck. You're way over aggressive. You have no trade plans. You don't know technicals, and yet alone you don't even know, you should know fundamentals. And just a whole bunch of degenerate gambler video game people come in, pop in $500, blow up the trading account, the broker keeps the $500. Your trades never actually entered the interbanking market. Okay? But how do you know? Well, the Swiss National Bank was a great example because there were very big brokers that said they were non-dealing desk, right? Oh, we're non-dealing desk. We don't trade against you. Okay. Well, then the Swiss National Bank surprised everybody by on Monday lying straight face and Tuesday pulling the plug on the defense of their euro price. Okay, they were pegged. And on an instant, brokers, in some case, very well-known brokers with non-dealing desks, lost hundreds of millions of dollars in 1 second. Do you know why? How could a broker lose money if they entered your trades in the market? Your trades are in the market. So how could they lose, as a company now, hundreds of millions of dollars? They were betting against you. They didn't enter the market. They're like, these idiots are going to lose money. Why would we give it to the market and someone else is going to profit? We'll take all these loser traders, put them into a pile. They're all going to lose their money, and therefore it just gets transferred to us. But that's exposed when suddenly the entire market collapses and not even the broker, which is betting against you, can get out. They're the ones that took the loss. Traders Way in that moment, I contacted them like, FXCM's going out of business, Alpari's going out of business, everyone's on the brink, right? And this was just after the financial crisis. I was really concerned that we were going into a true financial depression. It was such a bad thing for the Swiss National Bank to do. So anyways, like FXCM's going out of business, Alpari's going out of business. I'm calling all my friends. How are they doing in London? How are you guys doing in Singapore? How are you doing? Like, what's going on? I'm trying to figure it out. Like, I remember I'm sitting on the back deck and calling people around the world. And so then I'm like, oh shit, Trader's Way, because I think I just started working at Trader's Way, right? I'm like, shit. So I contact Trader's Way. I'm like, how are you guys? Are you guys okay? Are you guys okay? And they're like, yeah, we're totally fine. And I'm like, well, all these brokers are going to business. And they're like, no. We entered all our trades, and all the trades are in the interbanking system. So our clients might be losing money, but the firm isn't losing money. There's no counterparty risk here. All the trades, every single trade is in the interbanking system. So we're fine. So I'm like, you need to send a press release. You need to send an email. Like, you need to do it now. And they're like, oh yeah, I guess that's good. I'm like, hell yeah, it's good. Go send it. And they did. They're like, hey man, we're fine. As an institution that executes your trades for you, we're fine. Everything's fine here. We've executed your trades. They're in the interbanking system. So there you go. The proof is in the pudding, right? Brokers with non-dealing desks and 100,000 clients went out of business in 1 minute. Well, how is that even possible? Right? Okay. Amazing, right? Those were the do's. Okay. Cool. So facts are facts. That happened. Okay, great. All right. So if you were still a bull, there would be a plan A, right? And where would your plan B be? Your plan B would be here, right? What do you think? Would you agree with that if you were going to be a bull? Now, if you were going to be a bear, wouldn't you need at least a a reversal pattern before you decide to get bearish? I'd say yeah. So I'd be cautious on this. I think there's some upside room, but what did we know? So where are we here? What did we know 4 weeks ago? What did we know? Let's go back on a journey through time. Okay? Because remember, I'm trying to keep you calm and focused on doing your job, analyzing market conditions and executing your trade bias. Pretty simple. So what did we know 4 weeks ago, being calm and collective? So let's go back. 1, 2, 3, 4. Okay. 4 weeks ago, we had market conditions that said between that price and that price, if we are bulls, we would buy. And based on that buying, our target was here and a little higher than that, here. How many people would agree with that? Just using basic, simple, technical analysis, that's what we knew 4 weeks ago. If you were a bull, that's simply the most basic plan that could be made. If you agree, say aye. Two people agree. 3 people agree. 4 people. 5 people. 6 people. 7 people. 8 people. 9 people. Who's going to be the 10th one? 11 people. 12 people. All right, cool. 13. 14. Cool. All right, thank you. Then what's the big deal? 16, 17, 18 people. What's the big deal then? Like today, like yesterday was a big deal. Yeah? So, a bear, conversely, said, no, it's the end, right? It's the end. So what would a bear do? By the way, 4 weeks ago, this would have been a bearish trade plan. Sell just below 75 and target this. So yesterday, there would only be 2 scenarios. Up or down. Nobody knew which way, but you would have had your opinion. You would have set up your trades, and you were either busted out at break even or you made money. And that's how I've been teaching you to trade all year. Don't throw it away after the move. Do you understand? The money was made before yesterday. You got paid yesterday because your trade plan was right. Trading the volatility after the fact now is a loser's fool's errand. Like, my God, I teach you this every day, week after week, month after month. Have the trade plan. If you're a bull, look at this. If you're a bull, look. That's the trade plan. Like, that's it. That's it. That's it. That's all there was to it. So what about all this noise and all this news and all these things? Well, that comes with it. That just comes with it. Okay? Now check this out. You're like, but Wayne, right? Wayne, you're a bull here. Yeah, totally was. Right? And then I got out here, right? Cool. So, that makes me a bear. Correct me if I'm wrong, but I was short here. For 2 weeks, profitable. 2 weeks. Some of you guys can't Some of you guys can't stay in a trade for 2 hours. I was long for 3 months, exited when I said I would exit, right? Thanksgiving. Actually, I got out on the 1st of December, didn't I? So anyways, I might have actually got out right there. But anyways, and then you saw here for 2 weeks I was profitable. See, you see that, guys? I was wrong on my timing. Doesn't mean I'm wrong on my plan. Does not mean I'm wrong on my plan. My plan A failed. But do you understand? My plan A fail was profitable for quite some time. But I didn't lose money. I had the opportunity. And someone else said, well, they want an opportunity too. And this is their buy zone. It's as clear as the sell zone is clear to me. And based on planning, since we don't know the future, if you're a buyer at hardcore support or you're a seller at hardcore resistance, you both will have opportunity to make money, okay? And one will make a lot more money than the other. So think about that. I was actually profitable, I think over 100 pips for a couple of weeks. Huh. And I was wrong. The news came out, the market went up, but someone else got it right. But I'm still planning this now. Remember, I was long for 3 months. So right? So me breaking even with a free opportunity, I had a free look, man. I had the opportunity. I'm going to take the shot every time. Right? Isn't that nice? But what most people do when they enter the market is they're locked inside this candle. They're making and losing their fortunes inside that candle on this chart. But what I'm trying to say to you is like, yeah, okay, that's moved a lot and that's very exciting. Now, most amateurs are actually losing money on that. They're still buying and it's dropping like a ton of bricks. But that was my whole point walking into the room today. Did you feel that? Did you feel that? Like I walked right into the room. I'm like, this is dangerous. What you have in front of you is an opportunity to lose a lot of money. Could you feel that? Like I walked in the room and that was the message before I even talked about a pip. Look at it now. If you listened to me over the last hour, I just saved you a ton of money. Okay? Okay? This will be a great learning experience. This could be the beginning of the rest of your career. If you learn. If you chase price here, you've just thrown away your entire career, and I'm not joking. You can't do this, you fail. This is final examination week. This is finals week for me. I have final examinations Monday and Tuesday. Then it's all over. I pass and I get an A, or I don't pass. And look, and by the way, at Harvard, if I get a C, it lowers my GPA. And then I do not get credit for taking the class. Do you understand that? Isn't that amazing? If I get a C at Harvard, it kills my GPA, and then it doesn't even count. It's like I never took the class. I paid thousands and thousands and thousands and thousands of dollars for the class. It crushes my GPA, and then they're like, well, now you're not going to graduate because you didn't take a class. I'm like, I took the class. I got a C. I passed. I got a 78. They're like, well, a 78 at Harvard is a fail. Maybe you should try Yale. They might count it there. So like, this is your test, dude. You stand up and you fight and you pass. You're patient, you're disciplined, or you're broke. You have a long-term vision, or you take the bus to work every single day. It's one of your choices, right? You have patience, you have discipline, you have plans, you carry out strategies, and you do it every day with low risk and steady reward with low volatility, and you will attract investments, and you have a real business with income and cash flow and customers and all that kind of stuff. Or you take the bus to 7-Eleven and work the night shift because that's what you do well. So which one is it? What are you willing to fight for? Are you willing to fight for your piece of a $5 trillion a day market? Or are you chasing a yellow Lamborghini? Because some kid on YouTube sold you a ridiculous dream. Which one are you? The one that believes this is a hardcore business with access to a $5 trillion market, no accounts receivable, no accounts payable? Right? Hope says, I think you bought into a scam when where you're at a school where you can't make a 78. Well, I'm doing it to be an example to my children. I started Harvard 5 years ago when my children first started getting homework. And I said, no one ever taught me how to study. When I was a kid, I remember when I first went to university back in the 90s, I was getting a tour of this house that I ended up living in. And they're giving me this tour. And this sounds so stupid, but this is kind of where I came from. They're giving me a tour, and down in the basement, they're like, okay, here's where we have dances, and here's the billiard room, and there's a TV in there you can watch. And over here, there's a study hall. I remember thinking, what's a study hall? And they had a little round window that you can look in. And they're like studying. I'm like, never did that before. That's my background. Went through high school. I didn't study in high school. Just amazing, right? I'm like, oh, all those people studying, right? So now I'm like, here's my kids. They're children. I don't know what grade they were in at the time. 3rd grade, and they start getting homework. And I'm like, I tell my wife, I need to lead by example. I can't just tell them studying is important, it's going to impact the rest of your life. So I have to just do it. I have to study too. I have to learn new things constantly. I have to be sweating bullets over tests. I have to be writing papers. I have to be cursing about stupid teachers and all this kind of stuff. Like, they need to see a successful student so that they know what it takes. That's why I'm at Harvard. Now my fear is they're getting ready. They'll be in high school in a couple of years and I'll be done. I don't want to go for a PhD, right? But that's what I did. That's what that was for, right? And I like Harvard, by the way. It's hard, it's difficult, and it's arrogant. I remember when I thought about it, I'm like, I wonder if I can get into Harvard. So I went to a presentation, and the guy up front, like the Harvard recruiter, he's up front and he's giving a speech to all these senior executives about this new program and all that kind of stuff. And he says, well, it was something about like we don't have minors at Harvard. We call it something else, and I still can't remember what it was called. But we have these minors, and you can get your degree, and then you can sort of like specialize your degree and tweak your degree. And I'm like, well, that just sounds like a minor, right? So anyways, we get to the end, and it's Q&A, and he had talked about whatever they call their minor, right? And so anyways, I raised my hand, and I'm like, it sounds like I can get my degree and specialize it with this minor. And I know you don't call it a minor, you call it something else, but like everybody knows it's just a minor. Like, why don't you just call it a major and a minor like every other university does? And he leans forward, and he was quite serious. He leans forward, and he's like, because it's Harvard. We can call it whatever we want. I'm like, fuck. That is so arrogant. I love it. I was in like right then. Yeah, they can do whatever they want. It's Harvard. They're the best, and that's that. They don't care what anyone else does. And I've taken classes that were stupid, difficult, ridiculous, dumb, crazy, impossibly difficult. Redonkulous, stupid. Like, there's no way a human being can do this. So I didn't got an A. That's my education. Right? And that's the education I showed my children. So that's why I did it. But I have that work ethic, though, to, well, everything I do, but Forex, right? Right? This is what it takes. You step up and get the grade, or you fail. And there's lots of company in the couldn't make it, couldn't do it category. So you're either unique and you can do it, or you don't. So I'm telling you, this is like, in markets like this, you're patient and disciplined, or you're broke. You won't make it unless you're patient and disciplined. No tool is going to save you. No indicator is going to save you. Oh, if you only had my new pivot point indicator. No, dude. You don't have patience and discipline and a work ethic. So without the work ethic, you'll never have a bias. You'll never have a solid bias based on analysis. I don't even care if it's technical or fundamental. If you don't have a work ethic, you will never have a bias. If you never have a bias, you'll never be successful. Right? Well, Max, I'm not trying to be condescending. I'm trying to say this is a legitimate test of your courage and your strength. So I'm not being condescending, or at least I'm not trying to be. And I'm not talking about you personally. I'm talking about the 95 that don't do it. You're here every day, Max, and everybody else. I'm not being condescending to the people in this room. I'm being condescending to everybody else. Because there are lots of people losing money right now because they don't have a plan, they don't have patience, they don't have discipline, and they haven't done the analysis. Now, maybe they just don't know. They never could do it. They never did do it. They didn't have the right mentor. Maybe people are new today, and they walk in, they're like, oh my God, this is what I've been looking for. This is what I need. Well, cool. I'll be here all next week. Make sure you subscribe. Right? But it's us where I'm saying, everybody in this room, I know for a fact, has worked hard all year listening to me talk about acting like a business, having a 5-year trade plan, planning your trades in advance, thinking about developing portfolios based on your analysis, using technical analysis to confirm or deny market conditions so you can carry out your bias. If you're a bull, you only buy at support. If you're a resist, you're right. All of this, you've worked so hard. And then I said on the 12th of December, boom. And it happened. Yet again, right? And now you handle it properly and you pass the test, or you don't handle it properly and you fail. And you have to think of it like that. Okay? That's why you have to think about it this way. This is a test. You either win, you pass, or you fail. You get an A or you go home. Right? I hope you agree. You are patient and disciplined in the crucible now when the markets are moving, or you're going to be taking a real estate course in a month or two, or an options trading course, or you're going to do internet marketing and make millions of dollars putting something on autopilot. Okay? So that's the message I'm trying to get across. You can do this. I know you can do this, but you need to recognize where you at. This is it. You do or do not. There is no try. But I certainly, right, Max, I certainly wouldn't be condescending to you or to anybody else in this room. I love you and I respect you. You're here every single day. And of course, I'm here every single day. Okay? No, we can do euro dollar if you're interested in that. We can go through the world and then maybe call it a day. Let's start with oil. Yeah, okay, we can start with oil and then we can do gold. So, all right. I told you 2 weeks ago oil was done. Okay? That you should take the rest of the month off as an oil trader. Models and bottles, baby. That's right, Javier. Right, Javier says, surely the balance needs to be found in getting to the point of trading full time. Yeah, but degenerate gambling is not going to do it. Okay? You understand? Degenerate gambling will never get you where you want. If you're a degenerate gambler today, you'll be a degenerate gambler a year from now. You just have to shut that down. Well, Max, I hope we're on good terms. I can't really tell if we're on good terms. You might hate your drill instructor, as most people do, but then when you get to combat, you thank your drill instructor for teaching you so well how to survive. So I don't know if you love your drill instructor or hate him. But anyways. All right. So that's still done. It's still not worthy of trading. So let's take a look at this. Let's back this out to a 4 hour. And it's still just working it out. Look, I did this. Was it yesterday, guys? When did I do this? When I wrote this take profit. It looks like the whole thing tanked when I wrote it. Because I remember that was solid green. I think we shut that down yet. Was that yesterday? Does anyone remember? I think that was yesterday, right? Yeah. But we shut that down. It was all green though, wasn't it? It was all green. I'm like, uh-oh. So I actually wrote that and said, take profit. It's cool. Yeah, was it yesterday? But it was crazy green, right? Crazy green, right? All right, cool. Right on. Hey, never hurts to ask, right? Max, like, you can hear my iterate. You can hear my voice. You can see my body language, you know, that kind of stuff where I can't see that for you. So I just wanted to make sure I didn't insult you because that would be not something that I intended. Okay. I have no love or respect for the people that are not in the webinar because at the end of the day, that's how we make our money, right? If I have a hardcore disciplined trade plan, and I'm carrying out my trade plan, I need a loser on the other side that is not patient, not disciplined, has no plan, doesn't have the work ethic, greedy, sloth. It doesn't really matter to me. I need someone to transfer their wealth to me because I deserve it more. I'm more prepared, right? So we're wolves, so to speak, right? We're looking for the sick and the weak, the old, the tired, the slow. That's just, someone's got to lose money. It's a zero-sum game, right? So it's not the people in this room, but there are plenty out there, and we must cull the herd. It's good for everyone. We're adding liquidity so banks can move money around and all that kind of stuff. We add liquidity, right? So we take out all the sick and the weak. We add the liquidity. Big banks and big businesses could move money around because of that liquidity. And we simply cull the herd. We're hunters. Cool. Leonardo says, does anyone know why Aussie is strong? Leonardo, do you believe the United States is reasonably close to doing a trade deal with China? Hope, I am many things, and one of them is certainly a capitalist. So Leonardo, oh, you mean weak? Oh, well, it's by strong or weak. All right, well, if you believe a deal is going to go down, I mean, well, in that case, Aussie's going to benefit. So anyways, watch the commodities. But right now, guys, think about what I've been teaching you all year. Okay? I'm teaching about macroeconomics, right? Things like across the board risk on, across the board risk off. When we're talking about big global macro themes, it doesn't matter what's going on in Australia. It doesn't matter what's going on in New Zealand or Canada. It just doesn't matter. If there's a global theme, not one particular country, a global theme like risk off, year-end risk off, Aussie's coming down, CAD's coming down, Kiwi's coming down, everybody's coming down, except for funding currencies. All the loans and all the leverage of the world must be paid back. So every currency in the world will weaken except for Swiss franc, Japanese yen, and maybe dollar. I mean, the last few years has been complicated because the Fed has been creating all this, but typically the dollar would get strong too. And maybe even, I don't know, Singapore dollar might get strong as well. But it's only because of where the leverage comes from. Okay? So you might say, oh, well, Aussie's weak today. Why? Because there's this deal was supposed to be done, or the balance of trade is improving and all that kind of stuff. Okay, that is here, and then we're looking here. Okay? And when the risk on comes back, Australia will definitely benefit it, especially if there's a trade deal between Australia and the United States. Now, I think they will do a trade deal, and I think people will find out it's really not that meaningful. And so it'll be good, and then it won't be good. Does that make sense? The stock market will rally, and then a couple of months later, they're like, wait, there's no meat on this deal. There's no meat. Like, nothing happened. Okay? But like I've been showing you, if I'm wrong in all this, because this is just my speculation based on my analysis and my experience and whatever. If I'm wrong, I'll probably still make money. Or I'll break even a lot. And that's the difference. And I've showed you that that's possible by only selling at resistance and ideally in a downtrend. If I have the patience and discipline to only sell at resistance and then ideally wait for a downtrend, I will make money, even if I'm wrong. I just won't make tons of money. But if I'm right, I'll make tons of money. Well, I don't know what's been going down with the thing. So we'll see. The deadline is Sunday, so we'll see. Okay. All right, so let's move on. So someone wanted euro dollar. So let's go out here. Okay. What did we know 4 weeks ago? Let's talk about this. 4 weeks ago. This is this week, this is last week, the week before, and the week before that. Okay, 4 weeks ago. You ready for this? What was the trade plan if you were a bull? Well, first of all, we were in a bullish trend. Cool. So we know that. Cool. So you're going to be a bull in December is what you decided. Okay, great. So let's start by doing this. The first level 4 weeks ago, we knew that this around 110 was a buy zone. And we knew 4 weeks ago this was a buy trend, right? We knew that. Factual. If you were a buyer between those prices, between 110 and 110.50, then there was a breakout, pullback, long and gone. Now the next thing is, based on that, we knew if you bought like this double bottom now, right? I remember talking about this too, the double bottom at the monthly M3. Sorry, the monthly M2, right? That predicts this price. How many people can confirm that? 111.93. How many people can confirm that? 110-ish entry, 112-ish exit. Talked about it in the free webinars, talked about it in the swing trading group, but like it's very basic actually, isn't it? Like there's nothing complicated about that. All day, every month, same sort of plan, really, really boring. So someone says to me today, well, Wayne, what about euro dollar? See, to me, it's a little, I'm not going to say funny, but the hard work, like the stuff I want you to do is to be planning this in advance. So like, what do I think about the euro? You just popped 200 pips in your pocket for the month of December and it's Christmas time. Now, isn't it interesting that you hit this target on the 12th of December? Isn't that interesting? We've been talking about it for months and months and months. 12th of December, 12th of December, 12th of December, 12th of December, 12th of December. And we went from December 1st, guys, the first day of the month, you're on the double bottom monthly M2. And on the 12th, you hit the target. Wash your hands for supper, go home. Your family's waiting for you. Write this down and make it a learning experience, guys. It's not that I'm right. It's that we planned it. We talked about it. Every month I give you similar examples. Look, if you were a bear, you were right for about a week and it didn't work out because you were not right over, but you didn't lose any money. You don't lose money on that. You sold at resistance. It dropped about 50 or 60 pips and then you got knocked out. You had a free look, a free shot. You didn't score. You didn't lose money. Well, you got to be careful, Jack. That's not quite right. I said I'm looking to. I said between, okay, let's be specific. Between Thanksgiving and December 12th. It's really the Fed meeting, but the day after the Fed meeting, right? So we'll say the DFED meeting, okay? Let's be clear. I don't change my language. Thanksgiving. I know, okay. In this perineum, I think I called it one time and it was pretty funny. in this space, I am taking profit on all my yen pair long trades that I've been in since the third week of August, which I told you months in advance I was going to build a portfolio. Okay, so then I was long from the end of August, all of September, all of October, 3/4 of November, and then I said, hey, around this time, I usually look to take profit. And that's what I did. I did it. All of it. All of it. We talked about it in February, March, and April, May, and June, July, and August. I got the swing trading group back together on the third week of August for the sake of buying up all the yen pairs. And what did I say? In this period, this 2-week period, I'm probably going to dump all of those trades, the entire portfolio, take profit on everything. And then, now listen to me, Jack, okay? Jack, listen to me. Then prepare and plan for a profit-taking move. That's not just instant sell across the board. Now, on that first day, I took 6 or 7 trades, and they were all profitable. Well, I think they've all since got knocked out of break even. Had a shot, dude. I had a shot. But I did what I said I was going to do, right? Of course it is SB. That was my whole point of today's webinar. Of course it's dropping. But anyways, and then on this period for sure, if I had not exited on the 1st of December, I really seriously need to do it. Right? Peter did and just hit a total home run grand slam. But he only carried out the training. Okay? So I'm not telling you all the yen pairs are going to come down, all the Swiss franc pairs are going to come down. And maybe all the dollar pairs. The dollar is a bigger question mark than normal. But definitely Swiss franc and yen. But I am telling you that I'm planning for it. There's a huge difference. So this is an issue of timing now. So in that 2-week period between Thanksgiving and today, in that 2-week period, I definitely was looking to take profit and trying to slowly technically get in at resistance, looking for reversal patterns, tiptoeing in, managing the risk. And my first 6 or 7 or 8 trades all broke even. Right? Doesn't matter to me. And now I will continue to try, and I'm either going to be right and make money, or I'm going to be wrong and either lose a little bit or just continue breaking even for a few weeks. But it's year end. It doesn't matter. Okay? But it's not that all of a sudden I instantly stop and reverse. No. Preparing to, planning to, which means what? At least I need a change in market conditions. That's what technical analysis tells. I also need logical, intelligent resistance. So on December, this looked like logical, intelligent resistance. Why? That's the key bearish pivot point. And if this market fell here, that plan was to take it all the way down there. So if I was a bear, I'd sell that all day long. All day long, all day long. And I think it did. And, well, no, this is euro dollar. But anyways, it came down. And if you took those trades, perfect trades. Perfect trades. You broke even. Beautiful trading. Good job. You're too early. So you know your prices. You don't know the time. Right? Now, how about this? Is that also a plausible sell if you were a bear? Well, let's reverse engineer this. You know this is factual. Bulls bought here on the first day of the month. Their target, their first conservative target, is right here, 111.93. Is there a chance they take profit? Hell yeah! So it's a counter trend trade, But you have permission as a bear to do that. Now, what if next week does this? Low, high, and then down. Would you trade a double top up here, even though, right, your first trade maybe is only slightly profitable? Would you trade a double top if you were a bear and you're selling it at 111.93-ish? Hell yeah, all day. Crush it. Why? Because I'm a bear. So my bearish trade plan for the month of December for euro dollar, if I was a bear, would be I would sell it here, plan A, sell it here, plan B. This one was only profitable for a week. Yeah, bad trade. Only a week it was profitable. Once again, most people can't stay in their trades for 2 or 3 hours. But for 2 weeks, and we call it a losing trade, yeah, broke even. So what? Had a shot because the plan was this. Failed plan. Didn't lose any money. So what? Okay. Once again, now I can get back in the game. Now what do I do? Talk to me, Goose, right? Well, I either sell right there because I'm redonkulously aggressive, which I wouldn't recommend. But what about getting reversal plans now? Would that make you bearish? And this is what I've been talking about all day. If you were a bear, what would make you bearish? Plan it out, print out a blank chart, right? Do this. Drop into a 15-minute chart or a 5-minute chart, okay? And say, if you were a bear, what do you need to see here in the future to get short? So you'd print this out, and then you would start drawing. So I would say, I would look at this and say, okay, what do I know using technical analysis? What do I know? I know we're at support. So I do not sell here. There's no way I can sell there. Okay? Would you sell up here? So that's one particular plan, right? So draw it. So you're like, okay, if it does this now, I will look to sell a rejection at resistance, a rejection of 112. That would be called plan A. Cool. What about a different plan? Well, another way this would work, this would act as price action. Up, 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 down, down. So, right? So far you got maybe here you would sell, maybe here you would sell. Cool. What about a third one? Third one, you would do this. Down, 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 up, up, and then you would sell a rejection of that rule reversal. So now you got plan C. So you got plan A, plan B, and you got plan C. Which one's going to work? Nobody knows. So now you have to observe. Now you have to observe, okay? And so you should actually print those out, right? Print out 3 blank charts, draw all 3, and wait. Okay? What's the worst that could happen? It makes a higher high. So where's your stop? Okay? And so now plan for this. Start planning. Put it together. Okay? Now, if you're a bull, okay, if you were a bull, we were up here at 112, that would be a dumb place to buy. You couldn't have a dumber plan than that. If you bought up near 112, you must admit to yourself you have no idea what you're doing. None. Clueless. And you should back off your trading and start looking for education. Okay? Cool. But if you're patient, you know that this area is very attractive to you. The closer you get to 111.50, the better. I think we might have actually hit 111.50. Low 111.56, I think. 111.56 and a half. So the closer to 150, the better for you. Okay? In that case, your trade plan is this. Look how simple this is. Up, 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 down, down, buy, up, 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 down, down, buy, up, up, up. Okay? Isn't that nice? Patience and discipline. Are you happy that I logged in today? It maybe kept you out of some bad trades? I don't know if that's true, but most likely it was. Could have been easy to just say, go, 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 buy, 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 long, 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 yeah, risk on, risk on. No, no, no. I want to, if you felt aggressive today, if you felt like the fear of missing out that some people had talked about earlier, ask yourself, why didn't you feel that way 4 weeks ago when we had trade plans based on monthly and weekly pivot points? How come you don't get that feeling then? After the fact, after it's moved hundreds of pips, after it's all done, why do you get it? Why do you get a fear of missing out when you've already missed it? Hope. Yeah, I am cum laude, so. Like, that's to me the bigger, more challenging question. Like, right, this was all pretty straightforward, planned out. On the first, like, really, and then we'll end it here, okay, guys? But I want you to think about everything differently. Someone said the fear of missing out of this big move. Look at this on the first day of the month, guys. Monthly M2, weekly central pivot point, psychological level of 110. How can you miss that if you're a bull? That's the point, guys. All of this money was made here on the first day of December. Fear of missing out? Dude, you missed it out. You missed out 2 weeks ago. 3 weeks ago, we knew the price. 4 weeks ago, we knew the price. Like, the fact that this happened now, here, is irrelevant. And the fact it happened on the 12th of December should also be like, you should really take note of that. You're like, oh my God, we talked about that 3 weeks ago, right? Like, then it happened, and then it's over. What do you mean fear of missing out? It's already over. So the only thing you need to do now is what happens next. What are you going to do next week? That's what matters now, not what happened yesterday. And those that are chasing the riches of yesterday clearly didn't have a trade plan down here. And now they're trading up here with no trade plan. Okay? So there's two things you should be doing now. Will you buy it down there? Write it down. And by the way, I know almost nobody in this room will write it down. So separate yourself and say, well, I will do this because I believe it'll lead me to success. Okay? It's called a business plan, right? So anyways, and what's the second opportunity right out there? Some form of that. It might be this, it might be this, but whatever, you're creating plans, right? Okay? And if this falls for the next 5 weeks, I'm not saying it will, but I'm saying that I was talking weeks ago that on the 12th, I'd start looking for changes in direction. and that by the 12th and the end of the year now, we're in the new part, I will be selling. I will be buying dollars, I'll be buying yen, I'll be buying Swiss franc. I don't know if I'll be profitable, but this is game on, right? I told the swing trading group yesterday that I actually kind of hoped all these yen pairs would pop up, and that would be fantastic for me as a bear. Think of that. Because I sell high. Even if it popped up a couple hundred pips, doesn't mean I'm wrong. It just means I have to wait for the next price. So if this, I'll use this as an example. If I got something like this next week, I will be short at least to the third week of January. So that means the third week of December, fourth week of December, first week of January, second week of January, and third week of January. 1, 2, 3, 4, 5. I will be short. In my mind, I have to now adjust as we go through the fog of war, but in my mind, I'm not shorting it for 35 minutes. Not for 35 hours, but for 35 days. Now, I don't know, along the way, I might get knocked out at break even. I might lose a little bit of money. Or it'll drop so hard and so fast, I'll hit my targets in less than 35 days. So don't ridicule me if I make 300 pips on every trade and I do it in the next 21 days. And you'll say, Wayne, you said you'd be sure to... Dude, I made the money too fast. I'm sorry. Okay? So that's cool, right? Thank you for being on my team. Thank you for being in my life. Thank you for being part of the Forex.Today YouTube channel. Please consider being a client to Traders Way by visiting tradersway.com and opening an account. What else? Just have a wonderful weekend. Find someone that you haven't spoken to in a long time and give them a call. They're interested in what you're doing because you're an interesting person. So namaste. I will see you on Monday, and I will see you on Tuesday, and I will see you on Wednesday. I'll see you on Thursday and on Friday. I might be a little scatterbrained. I have a group presentation and 2 final examinations between now and Tuesday night. So I don't know if I'm going to sleep, but I will do my best because you're important to me. Take care, everybody. Oh yeah, and don't forget, leave comments, give the thumbs up, and subscribe. Leave comments on the video recording, not in the chat, on the recording. Find a recorded video, leave a comment, document what you learned, and then, of course, thumbs up and subscribe, all right? Take care, guys. Beep. Beep.